Technology continues to transform the wealth management industry, so much that some consider it a disruption. But for those who embrace and harness it, it's opportunity, a way to trailblaze, push past, and challenge the status quo. This is the thinking that drives a new breed of innovators to discover and develop new ways to do business, new ways to interact, and new ways to stay ahead of the changing landscape. But how do these cutting-edge ideas get discovered? And how can you get access to these industry innovators, the possibilities they offer, or the trends they create? It's Scratchworks, a FinTech accelerator that connects innovative technology companies and entrepreneurs with wealth management luminaries. The result of extensive collaboration between its 5 founders, Scratchworks expands the possibilities for FinTech companies and gives business leaders a front row seat to see what's next. As leaders of the top firms in the country, the founders, along with a consortium of industry professionals, determined 3 finalists based on submitted pitches. Scratchworks then celebrates the business or idea that best exemplifies the breakthrough thinking needed to be future-ready and transformative. And with the potential to receive seed funding, the result is a collaborative first step towards new discoveries, new relationships, and a whole new way of doing business. Because when innovative minds unite, the path is less a challenge and more a journey.
Hello, I'm David Cantor, head of the RIA and Family Office segments for Fidelity Institutional. And welcome to Scratchworks Season 3. Like so many of us, the Scratchworks team was faced with a unique challenge in these not-so-normal times. How can they continue their mission as a FinTech accelerator that connects innovative tech companies with wealth management luminaries during a time when almost all connections are virtual? Well, when the world around you changes, you adapt. And that is exactly what the Scratchworks team did. This year, we're bringing Scratchworks directly to your home office for a fully virtual experience that promises more stories of innovation, anticipation, and ideas about how tech will continue to empower advisors to deliver more value to their clients. And this is what you've come to expect from Scratchworks, and it is what we intend to deliver. This year's program, brought to you in 4 episodes. Each of the first 3 episodes will feature an advisor tech finalist, and the 4th will reveal the true intentions of our investors as they decide if they will invest in any or all of these ventures. Let's start by meeting the team of investors who are helping to advance the digital transformation of the financial services industry. Our investors are joining us from their home offices across the United States. Marty Bicknell from Mariner Wealth Advisors. Marty, how are you today?
I'm doing great, David. Good to see you.
Good to see you too. Where are you coming to us from?
I'm in Kansas City.
Excellent, excellent. John Jones from Brighton Jones, where are you coming to us from today?
I'm coming from Lake Chelan, Washington.
Lake Chelan, nice, nice. John Eady from Covenant, where are you coming to us from today?
Morning, David. I am in San Antonio.
Good to see you, John. Shannon Usey, where are you coming to us from today?
Normally it would be Southern California, but today I'm in Ann Arbor, dropping my son off at college. Go Blue.
Oh, on Wisconsin. And Michael Nathanson from the Colony Group, where are you coming to us from today?
Hi, David. I'm coming to you from the suburbs of Boston.
Nice to see you. Now, it's time to meet our next finalist. As a reminder, our 3 advisor tech finalists are LifeWorks, who is building a digital ecosystem on a common data model that connects the client experience across all segments of the wealth management process, delivered in a complete operating system for advisors. Reallocate, which is helping simplify the complex world of direct real estate investing by providing RIAs with an easy-to-use platform and helping advisors build better client portfolios. And Act Analytics, a tool that enables wealth managers to have value-based conversations with their clients utilizing a proprietary ESG scoring methodology. You've heard from LifeWorks in our first episode, and we'll meet Reallocate in our next episode. Today, we meet Act Analytics.
We want Act Analytics to be the company that brings sustainability mainstream. We want to be accessible, and we want people to understand sustainability unilaterally. In the last week alone, $7 trillion moved into ethical investing. Last year, ethical investing, or ESG market, quadrupled. Our team created a proprietary algorithm which optimizes investments for the values which are inputted by the user, which is incredibly unique, I think the first of its kind. People are very in tune with their values, and they always have been. We now have the ability to relate those values to the investments. You can quickly drill down with a client about what's important to them, talk to them above and beyond, the holy grail of risk and return. Our methodology takes industry sectors based in specific countries and regions, because we believe that that is most relevant to investors, to compare apples to apples and oranges to oranges when they're making investments. We evaluate those on 210 ESG factors, so environmental, social, and governance. Also include a C column as well, which is controversies. Those 210 factors are split into a materiality map, which is 15 different sections, which is emissions, product, diversity, management, controversies, and on from there. The advisor can use the reports to score a new portfolio against an old portfolio, which on the asset gathering side of things, where you're trying to compare and contrast what your competitors are doing and what you suggest that you can do, you can see an obvious advantage. Somebody once told us that it was impossible to have impact with public securities, and I think we've gone out there and proven them wrong.
The time has come for Mike to meet the investors and convince them that Act Analytics will be a prominent player in the future of wealth tech. So let's get started. Mike, the floor is yours.
Thanks very much, David. Very excited to be here today with Shannon, Michael, John, and Marty. It's an honor for me, and I'm truly humbled, and I'm here to tell you about Act Analytics. We are a ESG analytics platform, which was designed by in collaboration between a rocket scientist and a financial advisor, myself. And we got into this because we were asked for it. So about 2 or 3 years ago, the firm which my now partner and I were based out of, were asked by one of our biggest clients. It was a client in excess of about $50 million to get into the ESG issues in his portfolio. And it was something that we were embarrassingly remiss at. So we went to task. We were challenged by the fact that the client had another advisor in Denver who was all over the ESG issues. So we were going to be rewarded with the other half of his portfolio if we got the question right, and we were going to lose a half of the portfolio which we had if we got it wrong. So we ended up coming up with a beta trade optimized for 96 different ESG factors, which absolutely blew the client out of the water. And in event, we did keep the client, but what we thought about doing, afterwards was taking that technology out to other advisors and to other asset managers, and we considered long and hard about whether or not we go the sub-advisory route or
So Mike, this sounds like your origin story. Give us a little bit of update of where are you now and what are you looking for from these investors?
So we spent 12 months in the lab kind of perfecting our craft, and we launched in February right into the face of COVID, which was obviously not that opportune. We kind of pulled back our marketing dollars and are ready to kind of launch out into the market right now. So we have focused in on the last 6 months on some pretty incredible partnerships with the likes of Black Diamond, SSC Institutional we'll be launching with in September. I am incredibly pleased to say that we are launching with Riskalyze in the fall as well. And to top it all off, after 14 months of very painstaking work, we are launching with Bloomberg. So we'll have access to over 300,000 Bloomberg terminal users globally for our ESG product.
Got it. And so what brings you here to this forum? And what are you looking for from these investors?
So David, my pitch is we're looking to sell 10% of our company at a 10% $10 million valuation. We think that we have a incredible product standing on an absolute gold mine of opportunity as the sustainable space is gathering momentum on a day-to-day basis. We've seen $20 billion worth of fund flows in the first half of this year, and we're here to empower advisors to make the right choices in ESG.
Interesting. Empowering advisors to make the right choices, a rocket scientist and a financial advisor. So just to make sure I heard you correctly before I hand it over to the investors, you said 10% of your company for a $10 million valuation. Where I come from, that's $1 million that you're looking for.
That's right. We're looking for $1 million in capital.
Interesting. Well, let me hand it over to Shannon Yusi this time to see what questions you have before we go to the other investors.
Yeah, Mike, so from what we know of the space, at least what my firm knows of the space, is it's pretty crowded. So I'm just curious what makes your platform unique and what makes it stand out.
So I think one of the things that makes us incredibly unique is the objectivity which we've approached the problem with. A lot of the ESG data companies and raters are completely subjective in their scoring. What we've done is create software which allows the advisor to make their own decisions, to tilt factors towards what's important to them and their clients. And I think that, that is incredibly important to our story. We've also taken a quant approach to the issue as well. So we wanted to give granularity and transparency to the issue. So our competition provides a lot of fundamental research, which I think is very difficult for advisors to use on the fly with their clients. Those are two important ones. I think I can go on for a while, but those are two key.
Yeah, I think that's certainly helpful. Just trying to discern how you differentiate in the marketplace.
So Mike, I have a clarifying question. So the way I understand the way you're building this is for advisors to use to build their own portfolios versus this being a separate account manager. Am I seeing that correctly?
Yeah, you're 110% correct, Marty. We are a technology company. We are not advisors ourselves, although I was an advisor for 16 years. But we didn't think it was proper we don't want to compete with our clientele. We want to empower them to make the best ESG decisions possible.
So Mike, talk a little more about, you say you have these relationships with SS&C, Riskalyze, and Bloomberg. What does that mean in terms of a relationship? Is there revenue coming from that, or are they just resources that you're putting out there in hopes of spurring advisor interest? What does that mean?
So there are partnerships, essentially, they're all structured a little bit differently. Some of them are co-marketing opportunities. Some of them are integrations with our software. We're trying to avoid what advisors call swivel chair, which means that advisors can automatically upload their portfolios into our ESG environment and easily siphon out the ESG qualities of the portfolios or the investments which they're looking to make. We think it's a really key part of our story because we're doing all that integration work in-house. Shannon, more to your point, a lot of our competition hasn't got the ability to do the integrations which we're doing. And I think that makes us really easy to use, kind of a very quick and easy option for advisors to see the portfolios which matter to them the most, which is their clients.
Do you have any revenue today?
We have a small bit of revenue. We have about 22 clients currently. We've gained those absolutely organically, but our revenue is sitting kind of sub 50K right now.
What's your revenue model?
So we are a monthly subscription model, software as a service, $250 per user per month.
Is that enough?
How are you good?
Is that going to be enough? I'm trying to figure out what your burn rate is. I'm trying to figure out, whether $250 as a subscription fee per user per month is going to be enough.
So we are very lean. We are burning about 50K per month right now. And we would be using the proceeds of the investment in the vast majority towards marketing to, increase our subscribership. We are looking at Bloomberg that has 18,000 dedicated ESG users currently. On our discovery database, we've got about 6,000 RIAs that deem themselves sustainable. So that's 24,000 ESG users, which we're going to have on day one in September. So if we're capturing a fraction of that, 10%, 2,400, or a 5%, 1,200 advisors, we're going to be cash flowing positive in very, very short order. And I think that's a fairly conservative subscriber uptick.
Mike, what's your plan to get them? I mean, so you're going to be on the same platform with them. What's your plan to market them and get them on board?
Yeah. So as you said, Marty, I think we've built the pipelines into the advisors. I think we've got world-class integrations. And we're doing a lot of work through PR and digital marketing. We were looking at the conference circuit and getting out and doing, the face-to-face meetings, but obviously that's been stymied a great deal by COVID-19. I think at our price point, Michael, we are able to, allow advisors to get in and try this. Big part of our mantra is the accessibility of our system. We're not a $20,000 a year system, which is going to, prohibit a lot of people from using us. We want to be there where we're easy to access. And I think we're priced right to do that.
Mike, can you talk a little bit more about Morningstar and their product? And how, when you're out there looking for a solution for this client, did you look at that, and what other companies did you look at, and how are you different than what's currently out there in the marketplace, other than just price?
Sure, John. So Morningstar has recently completed its purchase of Sustainalytics. So we know that they're seeing ESG as the future, but Sustainalytics was primarily a research shop. They were fundamentally driven. So we are looking at their research, and some of it was 86 pages long. I mean, it was, death by kind of like a 1,000 cuts. We've created software which is really easy to use, which, allows clients to use our software, which is, while their clients are in front of them, and while they're on the phone, or, to be able to look at their investments on not only the single security level like Sustainalytics, not only the fund, the fund level like Sustainalytics and Morningstar, but also at the portfolio level. So advisors can integrate their portfolio, look at it quickly, but also do a values alignment, which is completely objective to the advisor or the client, which Morningstar will not allow you to do. They're purely doing a subjective analysis. They're trying to tell you what is important to them. And I don't think in a field like ESG, that's the right way to go about it.
And on the onboarding process, I know that's always a challenge, because a lot of times clients love the idea of ESG, but don't exactly know what they really want and how to select the portfolio. Can you give us a little bit more of a picture of that user experience?
Sure. And I think it depends on whether or not you're approaching it from a proposal or an existing portfolio starting point. We can quickly upload a portfolio if it's at the proposal starting point, but if it's already in your environment or an environment which we're integrated with, you can, quickly bring up that portfolio and then do a factor tilt to what is important to your client, which we will allow you to save and continue to use. So for investment policy statement purposes, you can consistently deliver on the ESG, which you've looked at on your initial meetings. So that ESG journey will be consistent from day one, hopefully through the lifetime of the client. So once you've brought in the portfolio, you can look at individual securities, score them yourself on an ESG basis, decide whether or not they serve a purpose on the serve a purpose or are aligned in the investor portfolio, and then turn that around and make adjustments as need be to that investment portfolio.
On the customer side, to help figure out what they actually want in the portfolio, right? So I'm thinking questionnaires, things to help the client figure out what does ESG mean to them.
That is 110% part of our roadmap. We're going to create a questionnaire for advisors to use to educate their investment policy statements, so they can continually align the ESG values that the client wants with their portfolios.
But there are competitors doing that right now. And what you're saying, when you answered Shannon's question, what you focused on was not that as a differentiator, the customization. You focused on the objectivity, the quantitative aspect of this, the fact that you're comparing to benchmarks, et cetera.
I think that's true. I think that there's two key differentiators. I think that quant basis of our platform is incredibly important to what we are doing, but also the customization or the values alignment is another key part of what we're doing. We want to be absolutely malleable. It's not our job to tell you what's important. A lot of the reason why advisors are getting into ESG these days is because, it's important to their clients, not because of what's important to the asset managers per se. And we'd rather hold the asset managers' feet to the fire by siphoning out exactly what they're doing. We provide the quantitative granularity and transparency to ensure that your asset managers are absolutely doing what they tell you that they're supposed to be doing.
Are the revenues by firm, or is it by advisors? So if you have, a couple hundred.
We have advisors, and we have both. So ESG is a really interesting space. Like, it has absolutely permeated institutional world. Absolutely, it's there. The pensions are using it. The pension consultants are using it. It has trickled down through asset management land and is now kind of starting to permeate the advisor world. I mean, we think that it's probably between like 10 and 20%, through advisory right now. And I've been on all of your websites, and I know that everybody on this panel is thinking about ESG and thinking about values, and it's core to everybody's process according to the website. So we think the massive opportunity for our business is to allow people to deliver on ESG on a consistent basis. We see the independent advisor, industry as a grouping of people that are ready for ESG and don't have it yet, and their investors are asking for it.
So Mike,
in different ways.
Mike, as we wrap up to hear what our investors think and react, one question for you. You've talked about your software, the technology. What is the status of your intellectual property? What is the status of any patents or other intellectual property you may have?
So we have built, I think this is one of the really cool things about ACT Analytics. We have built everything tip to tail ourselves. We have discussed long and hard about the patent the patent route. I think we could probably go that route, but we haven't at this point. We have built a really exciting new news API, which delivers real-time ESG, which I think also is a huge differentiator between us and our competitors. And we have a rocket scientist at our helm, so we're able to create.
That was a great discussion. But are the investors ready to make a commitment? We'll find out soon. Join us for our final episode as we continue the discussions with our finalists in our season finale, where we will arrive at the moment we're all waiting for. What deals are on the table? And how will our finalists respond? Please join us as our investors will wrap up their discussions with our finalists. We'll see you then.
Be sure to join us for the next episode of Scratchworks, Season 3. The investors meet our last finalist, Adam Hooper, from Reallocate, which is helping simplify the complex world of direct real estate investing by providing RIAs with an easy-to-use platform and helping advisors build better client portfolios. We hope you can join us.